Thank you, Anuj sir, for coming live on the call and giving us a market outlook currently. So, without wasting any time, I would like to know, sir, all of this global geopolitics thing happening in the world and lot of war news, crude oil prices. I want to know, sir, what is the geopolitically stance right now in the market?
So that is the a very good afternoon to all the viewers. That is the hottest topic today. And to be very honest, it is uh, very difficult to assess the geopolitical situation, how it will evolve in coming days. And that is what the way it evolves will have an impact on the markets. Uh, so if we consider there can be in absolute terms, there can be two scenarios. One is that the disturbance pauses and going forward, the issue gets resolved. In that case, the markets are near the bottom. If the happening is exactly opposite to what I've just said, which means the disturbance will further escalate, we will have to see the intensity of escalation, the involvement of multiple countries, which will define actually how much it will impact the Indian markets and the global markets and the economies across the globe.
Also, due to because of this geopolitical things and escalation between the US and Iran, the crude oil prices have recently gone up to $120 per barrel, and it has recently been cooled off. Where do you see and how do you see that the crude oil prices impact our economy and how important it is for our country and the worldwide supply as such?
So you're right that the crude prices shot up to $120 recently, about I think 2 days back before Mr. Trump gave his statement that we are nearing the end of the war. And they have corrected severely, not back to the levels where we started from, but 60-70% of the rise which had happened in a very short period has been given up. Hoping that the geopolitical situation settles down, which is the main cause of rising crude prices. If the crude settles around $70, $65, it is quite bearable. Uh, but anything above $100, it will impact very severely the global economic growth. It may pose challenges for most of the economies, and in particular for India, because we are a very high we have very high import dependence as far as crude is concerned. And since we are importing, our foreign currency outgo will also be very higher if we have to import it at a very steep prices. Any disruption in the supply chain of gas and other energy fuels can also disrupt manufacturing activities in India and across the globe. So in any case, anything crude prices above $100 are not good for global economies as well as for Indian economy.
Also, so जैसे ही crude prices इतने बढ़ गए, you said कि $100 के ऊपर nothing is good. So, which sector do you think will be the most affected out of this? And कौन से stocks हैं जिन पे अपन ऐसा focus रख सकते हैं?
So if in case the crude prices continue to rise, which means geopolitical disturbance also is continuing. So what I see is there will be certain pockets which will continue to do well, primarily which have domestic consumption theme. But generally, very specifically also, I can say that increasing geopolitical disturbance will have a positive effect on the oil exploration companies. And so in that sector, you have ONGC, you have Oil India, and certainly for defense companies also, because it will increase the order book position. There'll be a lot of accumulation of defense artillery by various countries, including India.
Okay. That's quite insightful. Also, I would like to know that looking at the Indian markets also, so sir, from the past 18 months, the Indian market has been underperforming, and the global market situation has also been slightly more or there less. How do you tackle this volatility, and basically, how do you see the market is going to look forward? And from your past experience also, since you have seen many multiple cycles also in the market and volatility phases like that, how do you suggest one investor to tackle this during this period?
So I'll take your questions in two parts. First is
Yes.
the underperformance of Indian markets in last 18 months. So typically what I've seen is that the financial markets move in cycles. Post-COVID, due to pent-up demand and rising inflation, uh, we went through a cycle of very high profitability amongst the corporates in mostly across the sector, which resulted in a steep rally in stock markets across the globe. More specifically, Indian markets saw a very sharp rally starting from 2021 till 2024. Uh, they offered supernormal uh, returns to equity investors at that point of time, and they needed to pause post this rally. As the pause started, we had series of events like tariffs, and then Indo-Pak war, and then now you have the Persian Gulf disturbance. So all these
Yes.
events contributed to acceleration of correction or downside movement. Uh, on hindsight, I think that though these were unknown events, they have made the valuations of the stocks in Indian market more reasonable and attractive, and corrected all the overvaluation that was existing during the rally from 2021 to 2024. Uh,
Okay.
and the
So
second part of
valuations.
the question, the second part of the question is how should an investor act or react to such volatilities and behave or think about investing where in for future gains. So typically, what I have observed through my experience is there are three types of people who indulge in stock markets. One is the traders oblique speculators who are busy every day buying, selling futures and options and other hedge instruments. The second category is a trader come investor. Uh, the
Hmm.
trader come investor is the one who primarily has a goal to be there in the market for longish period. But if he comes across certain periods like 21 to 24, where the market is offering a lot of opportunities and a broad-based rally is on across the market, then the trader come investor does not hesitate exiting whenever the stocks give him the opportunity at a short period also. And the third is the investor who comes into the market for a longish kind of period and looks at the companies to be bought very seriously and stays with them for a long to participate in the growth of the companies. So for the the first category of players, the option and future players, I have no suggestion because I myself do not subscribe to indulging in stock market from that in that mode.
From
For,
futures and
for
options angle.
yeah, futures and options. For the second category, who are traders come investors, I think the as you rightly observed that in last 18 months the markets have seen correction or are sideways. There are not too many opportunities which will make money for markets in, I mean, for the buyers in short period. So they have to be slow on the trading activity, look at bad news to buy, and good news to sell, uh, as far as their trading portfolio is concerned. For investing, I think the situation right now is very opportunistic and opportune rather. You should have your uh, list of shopping list ready. In fact, one can start attempting buying in small quantities at these prices also, because in worst scenario, whatever may happen, I feel that the markets, if even if the geopolitical escalation happens, the markets may see maximum 8 to 10% drawdown from here. And it is not possible to catch the bottom always. For a long-term investor, it is always better that when the prices become reasonable, do not be fearful and start investing piecemeal basis.
So, what are the key Nifty levels which you are looking at that a person should keep in mind to buy on the dips? And where do you see Nifty like on the end of the year also? Is that
No,
also I would
so
like to answer? I would like to
So
question
I
also.
would not like to predict the Nifty because now I'm not an expert on that. But somehow the way the stocks are behaving, as I told you, that I don't see the frontline indices dropping by more than 8 to 10% in the coming time, come whatsoever, even in the worst case scenario. Uh, and indices are bound to go up in long term, barring the intermittent hurdles like the geopolitical tension or trade wars or tariff wars or things like that. They may keep on hitting the market in between, but the long term trajectory remains up only.
Okay.
So accumulate at these levels, and for next 2, 3, 4 months, whenever an opportunity comes, you can partially offload also.
Okay, to sum it up, basically, you meant to say still there are a lot of fears and all, but one should look the war scene and the crude oil prices and little bit on the cautious side, but one should look for opportunities since the valuations have now become cheaper after the steep rally of the COVID, and one should look for buying on the dips. Looking forward as the year is also coming to end. Also, since the financial year is coming to the end, I would like to know what thing you would like to suggest to people, like since there is tax coming right now, and where do you suggest the tax loss harvesting should a person do? Since the market has been an underperformance from the past 1 year, let's say, and not many people are on gain, and people are complaining about the rising taxations in the system. How do one should basically plan their taxations also?
Right. So if you've been lucky enough to have booked profit during the financial year 2024 or 25, 26, uh, and have booked short-term capital gain or long-term capital gain, then this is one tool which is used by market players of selling stocks which have a lower value at this point of time and have a book loss, book them and get a set off against the long-term gain or short-term gain, which is already sitting there in the books to reduce your tax liability. But let me tell you, the irony is um, uh, when the rally is on, say for last 3 years, everybody had profit. So there was no a way to harvest your losses because there were no losses in the books. And now most of the players would have short-term losses. So all if you try to use this tool, it will be of no use because there are no gains booked mostly. But certainly there are mature players, 10, 10, 15, 20% of the top players who understand markets better. They must be having, and they are well versed with this tool to reduce your tax liability.
Yes, tax loss harvesting is an important aspect. Thank you, sir. It was amazing to have you on board today. Thank you for your insights. We wish to having four more sessions like this in the future also, and keep coming. Thank you, sir, for motivating us.
Thank you very much. It's always a pleasure to be there.
Thank you, sir.